What's up, everybody? My name is Zach Pasquarello. In this video, I'm going to talk about my journey from bookkeeper to real estate lender, and now how I'm earning passive income through real estate lending, about 12% ROI on my money. What you're doing is risky, but entrepreneurship is inherently risky. Don't ever let anybody tell you that starting a business is going to be easy. Everything that you do is going to be risky. Entrepreneurship is risky. So you've got two options. If you are thinking about quitting your full-time job and going all in on entrepreneurship, you can rip off the band-aid and just go all in, or you can slowly transition. You can keep your job, slowly transition into starting your business. Or if you're starting a new business, you can slowly transition from your old business into your new business. But here's the thing. Entrepreneurs take outside risk, and therefore entrepreneurs get outside returns. High risk, high reward. We've all heard it before as entrepreneurs, business owners, investors, self-employed. We take incredible risk. It's not very risky to go to a job interview and get a salary. It's much easier to make $60,000 a year, maybe even $100,000 a year as an employee. There's tons of jobs that offer $60,000 to $100,000 annual salary, but it's much harder to make $500,000 as an employee. You have to be a C-suite executive or a medical professional or a partner at a law firm to make $500,000 a year. But as an entrepreneur, it's much more likely that you're going to make $500,000 a year. So outside risk, outside returns, high risk, high reward. And you've got two options when you're making this transition. Rip the band-aid off and just go all in, which is incredibly risky, or slowly transition from your old job, your old business into the new business. So I'm going to talk about why I left bookkeeping to pursue private money lending. If you've been watching my videos for a couple of years now, I worked up to the point where I had 87 bookkeeping clients. I'm not firing my clients. I'm not selling my bookkeeping business, but I'm also not actively recruiting new clients. If you've been following me on social media, Facebook, Instagram, LinkedIn, I have been talking exclusively about private money lending and Zip Capital. If you want to follow me, check out the links in the description of this video. Check out my social media, and you can follow me there if you want to follow along this journey. It all comes down to leverage. Private money lending, there is so much more leverage, but don't be confused. Don't be fooled. You can't just jump right into private money lending. You need active income. You need cash. That is the barrier to entry for private money lending. If you're starting a service-based business, landscaping company, you just need a lawnmower. Bookkeeping company, you just need an internet connection and a laptop. But to start a private money lending business, or even to start investing at all, you need to have money. But the leverage is incredible. Let me break it down for you. A $100,000 loan makes about $18,000 per year income. Here's how. I do 6-month loans, real estate investing. I do 6-month loans, and I make 12% annual interest. But then I also make 3% origination fee. If you've ever applied for a traditional mortgage from a bank, every lender charges an origination fee. Banks usually charge a little bit lower, like maybe 1.5%. As a real estate private money lender, I can charge a premium because I offer speed and flexibility that traditional banks don't offer. So I charge higher interest rate, higher origination fees, 12% annual interest, 3% origination fee. But keep in mind, my loans are only 6 months. So they get paid back in 6 months. And so I do it all over again. 12% annual interest, 3% origination fee. So I get the 12% annual interest throughout the year, and I get the 3% origination fee twice. So on $100,000, if I flip that loan twice in 1 year, I'll make about $18,000 per year. Now, if you have a bookkeeping business, this will make sense to you. That is the equivalent to about one large bookkeeping client paying you $1,500 per month. And I would say on average, maybe 6 to 10 hours per month for a large bookkeeping client, $1,500 per month. But that's every single month you're working. And we're talking about leverage here. So as a bookkeeping business owner, you're leveraging your time. As a real estate private money lender, I'm leveraging my money. So we're leveraging two different resources here. So as a bookkeeping client, one large bookkeeping client, you can make $18,000 a year with one bookkeeping client. Absolutely. So you can make the same amount of money, but let's look at the time requirement invested in the bookkeeping business versus the private money lending of $100,000, 6 to 10 hours per month versus two loans per year at 6 months terms, $100,000. You're talking 2 to 4 hours per loan. So twice per year, 4 to 8 hours total to lend out $100,000 versus 6 to 10 hours per month, 4 to 8 hours per year total. So we're talking same amount of money, same income, $18,000. But with the bookkeeping business, you're leveraging your time. With the private money lending, passive investment, you're leveraging your money. So you can start a bookkeeping business with $0, but you're going to spend, in this example, 96 hours per year. Let's just say 6 to 10 hours per month. Let's average it out. 8 hours per month times 12, 96 hours per year to make $18,000, which is a really great hourly rate. I'm not saying it's not a great hourly rate, but when we compare the time requirement, the time leverage from bookkeeping to real estate private money lending, 96 hours versus 6 hours as a private money lender. But keep in mind, $0 and 96 hours, $100,000 and 6 hours. That is 16 times more work, more time, more hours to make the same amount of money. So that's why it's just been a natural progression for me as a bookkeeper to transition into private money lending because I put in the work for 5 years of earning active income. And now I have about $1 million of my own cash saved up. And so I'm also raising money in Zip Capital. So basically, I ran out of money. I did private money lending for the past 2.5 years, lending out my own money. And then now I started Zip Capital. So now I'm making these YouTube videos so that I could just talk about my journey, but also two, teach you how to do your own private money lending. Because if you've been following along, I have taught you how to start your own bookkeeping business. And so now hopefully you've got a successful bookkeeping business. And now you have $25,000, $50,000 saved up, and then you can follow along and you can grow with me in my journey to transition from bookkeeper to real estate private money lender. You can continue doing both simultaneously. So I'm not suggesting that I or you should or have completely gotten rid of the bookkeeping business. It's the golden goose. It's the cash cow. I still have the bookkeeping business, but now I'm just transitioning to leveraging my savings, investing, earning passive income through private money lending. And then I've also launched an investment fund, Zip Capital. So I understand that some of you will be able to do your own private money lending. That's amazing. I'm here for it. I'm not going to get anything from it. I'm not selling a course. I'm not selling one-on-one consultations. I don't have any digital downloads to sell you for private money lending. But what I do have to offer, if you don't want to do your own private money lending, you can invest into Zip Capital and you can earn 8 to 12% fixed returns investing into Zip Capital. And then I'll use your money to do these private money loans, real estate in Pennsylvania. And if you can see on the board behind me, I have $358,000 currently raised from 5 different other investors. I just launched my investment fund in January of 2025. I've got 5 investors and my goal is to raise $5 million. So I compare this transition a lot to several other industries. I think it probably happens more than you might realize. Imagine the transportation industry. You have a truck driver, entrepreneur, solo entrepreneur, owner operator, independent contractor, truck driver. He's got a box truck or a tractor trailer, and he is driving every day and making amazing money, working for himself. He owns his truck. He owns a company. He's got bookkeeping and he files his own taxes. He does everything. He pays for his own maintenance, his own fuel. The broker pays him directly. He's a truck driver. He's not a company driver. He's an entrepreneur, self-employed, but he's a truck driver. Now imagine that same person then transitions to becoming a freight broker. So now instead of earning money by driving every day, he could simply broker the freight. So he's not spending his time earning the money, but he's leveraging his network, his knowledge, his skills, his software, his sales ability. So now instead of earning money per mile, now he's earning a percentage of all the freight that he brokers. So that transition from truck driver to freight broker makes a lot of sense because he knows a ton about the transportation industry. So it's an easy, not easy, but it's a transition that logically makes sense. Truck driver to freight broker, but his leverage and his earning potential is probably significantly higher as a freight broker because they're basically salesmen. They can make a percentage off of the freight that they broker. So they could just simply broker more freight and make 10x more income as a freight broker. Similar transition, bookkeeper, doing the bookkeeping, earning money as a bookkeeper, servicing my clients, putting in the hours of categorizing transactions on a weekly basis, transition to private money lender, still similar, still analyzing financial reports, still underwriting borrowers, reviewing tax returns, networking with real estate investors, servicing the same clients, but instead of categorizing their transactions, I'm lending them money. So similar but different, but it's a logical transition. Let's talk about a photographer. You're doing pictures, you're an artist, you're making money by photographing your clients, but then you transition into photography equipment rental. So now you have a warehouse with $5 million of inventory and you're able to rent out your equipment. You're able to rent out millions of dollars of equipment and you're able to make hundreds of thousands of dollars every single month. Whereas that would have been nearly impossible as a single photographer, but now you've transitioned into photography equipment rental. So similar industry, logical transition, but different businesses. And then finally, imagine you're a landscaper. You're cutting grass, you're doing patios, you're weed whacking, you're trimming bushes, you're doing the landscaping thing. You maybe even have a couple guys on your crew, and then you transition to luxury pool architect. So now you're designing pools and you're charging $20,000 to work the software on your computer and design luxury pools. So similar industry, but your leverage is much higher. I'm sure you could earn significantly more as a pool architect that you could as a landscaper cutting grass. Different jobs, similar industry, logical transition. So this is why I'm no longer actively pursuing bookkeeping clients. And instead, I'm leveraging the cash that I have and the network that I have of real estate investors. And I'm transitioning to private money lending and trying to grow Zip Capital. So how did I discover real estate private money lending? Honestly, it happened by accident. I was not looking to start a new business. I love my bookkeeping business. I love QuickBooks Online, categorizing transactions. I compare bookkeeping to solving a puzzle, and I love solving puzzles. Categorizing transactions. Each individual transaction is a lot like a puzzle piece. And because of that, once you have all the transactions recorded and categorized, the end of month, end of year financial reports are kind of like a puzzle. And it's really satisfying doing the bookkeeping, helping business owners get updated and accurate, organized financial reports. I love it. So I started doing bookkeeping for real estate investors. And then I started asking questions. I started noticing that these local real estate investors were buying properties, but they weren't going to banks to get mortgages, and they did not have $500,000 of cash. They were leveraging other people's cash to buy these properties, and the other people were not institutions. They weren't private equity companies. They weren't family offices. They weren't local credit unions. They were dudes and dudettes. They were husband and wife. They were random people, individuals, young, old, entrepreneur, retired, W-2 employee, regular people in my community. They were making thousands of dollars every month, interest income, charging 12% interest income. And so I started asking questions. Who's this guy? Who's this couple? Who's this lady? Who are these people? And my real estate investor clients were telling me, oh, they're just my private money lenders. They're just regular people who have a couple $100,000 of cash sitting in their 401k or their bank account, and they lend on our deals. And so I learned about it by accident. And then the transition was easy. I just started leveraging my current bookkeeping knowledge. I started leveraging my current network. I am still on the same social media channels, Facebook, Instagram, LinkedIn. I'm still making posts, I'm still making videos, but now I'm still sending direct messages, I'm still sending emails. I'm doing the exact same thing. Instead of talking about QuickBooks and bookkeeping and tax strategy, now I'm talking about private money lending on my Facebook. And now I'm sending messages. I used to say, "Hey, I'm a bookkeeper. Let me know if you need help with your QuickBooks." But now I'm saying, "Hey, I'm a private money lender. Let me know if you ever need a loan for your next real estate acquisition. Let me know if you need funding for your next real estate investment." So I'm leveraging everything that I've done in the past. Everything, all 5 years of experience that I have perfectly set me up to have a smooth, logical transition into real estate private money lending. And the cool thing is, you can do the exact same thing. You can start your bookkeeping business, you can grow your bookkeeping business, you can learn about real estate investing, you can network with real estate investors, you can do social media marketing to get bookkeeping clients, save $25,000 of cash, and then start real estate private money lending. So let's talk about the first deal that I funded. So this isn't going to be the first deal because I've already talked about the first deal. August 2023, $50,000, got my money back in 30 days. Let's talk about the next deal that I did. It wasn't my hometown, but it was about 30 minutes away. So still my local community, not too far away. Side note, I only lend in Pennsylvania. So if you're thinking about starting real estate and private money lending, you don't need to lend in other states. You can simply lend in your own state. You could even lend in your county or the current city that you're in. There are so many borrowers out there. You don't need to branch out and get crazy and start lending in Michigan and California and Texas and Florida. If you live in Tennessee, if you live in Nashville, just lend in Tennessee, just lend in Nashville. You don't need to lend in Florida and Texas. There's plenty of real estate investors who need private money lenders, I promise you. You just need to do networking and marketing. Just like I say with starting the bookkeeping business, there's plenty of people out there who need your services. You just need to do some sales and marketing. Side note, if you have any questions, if you have any comments, let me know in the chat and I will do my best to answer your questions. I'm probably going to wait until the end. I've got a couple of notes that I want to get through, but I will do my best to answer all of your questions. Okay, so the first deal that I funded, $180,000. So I got an SBA loan back in 2023 for $150,000. I was paying 11% interest on my SBA loan, and I ended up using it to grow my bookkeeping business. And so by using that SBA loan in my bookkeeping business, I was able to save more cash. I didn't have to use my cash flow to reinvest back into my business. I used the SBA loan for my bookkeeping business, and then I was able to save more of my cash. So at this point, in December of 2023, I had $180,000. And so I did a loan with one of my bookkeeping clients. That's the coolest part. That's the best way to get started, in my opinion. As a bookkeeper for real estate investors, you're going to learn the ins and outs of real estate investing, like HUDs, closing costs, loan fees, title agents. You're going to learn how all of this insurance, you're going to learn utilities, real estate property taxes. I didn't know any of this, but as a bookkeeper, I got a behind the scenes look. And so I lent to my bookkeeping client. And I'll be honest, my bookkeeping clients taught me a lot about private money lending, even when I started as a lender. My very first deal, I picked my best bookkeeping client, my best real estate investor. And I said, "Hey, I want to do a loan with you." And so he held my hand. He walked me through the process. I trusted him. He had been my client for a long time. We had a great working relationship. There was a ton of trust built up. So, not recommending that you just do your first private money loan with any random guy walking down the street. Find somebody who you trust, build a relationship with them, work with them for a couple years, figure out, learn from them, and then consider doing your first real estate private money loan. And also, I had full control over their finances. I had full access to their bank accounts, their P&L, their balance sheet. I was literally paying their bills every single week. So I was very involved in this company when I lent to them. So that was a great way that I could mitigate my risk as a lender. And you can do the same thing as a bookkeeper. Such an amazing opportunity. We've got access to tax returns and transactional data and real time banking information. We can see all of this information. Okay. Bookkeeping client did a loan December 2023, $180,000. I charged a 3% origination fee. So, boom, immediately $5,400 one time fee or upfront closing costs. This particular real estate investor was pretty experienced. He was good at what he does. So it took him 65 days to flip this property. So over the course of 65 days, 12% annual interest. I ended up making about 2 months of interest. So about 2% of interest, about $3,777 to be exact. So I made 2% of annual interest over the course of 65 days. I made 3% upfront closing. So I made 5% in 2 months in 65 days. So that ended up being, when you look at an annual ROI, that was a 29% annual ROI on that deal, which is incredible, which is amazing. And so it was really at that point. I did my first deal and I made $1,000 in 30 days. I did my second deal and I made 29% in 65 days, 29% annual ROI. So just remember, interest rates, return on investment, it's all on an annual basis. Whenever you look at bank CDs, whenever you look at mutual funds, whenever you look at ETFs, it's all on an annual basis. So you always want to make sure that you convert your ROI or your interest rate or your income to an annual basis. That way you're comparing apples and apples. So the first deal that I funded, or the second deal in this example, was with a bookkeeping client. Now, I will say it's not always rainbows and butterflies. So if you know anything about me, I promote radical transparency. So I will tell you, this was the third deal that I did. The second and fourth loan that I did ended up taking close to 12 months. So I only actually made about 15% annual ROI on the second and fourth deal that I did, because I charged 12% interest and 3% origination, and it ended up taking 12 months. So that's still a 15% ROI. So I'm not up here telling you that you're going to make 29% annual ROI on your money, but I am telling you, at least from what I've seen, what I have been able to do, and this is just for educational purposes only, but I am telling you that I charge 12% annual interest on my loans. And then I also charge 3% origination fee. So even if the loan does go 12 months, I'm still looking at a 15% annual ROI. And if the loan closes out in 6 months, I'm making 18% annual ROI on my loans because of that 3% origination fee. And then there's also an underwriting fee, a processing fee, and an extension fee. These are all optional. You don't have to charge them, but I usually do, especially with a first-time borrower. So the extension fee is really important. So I have my loans set to 6-month terms, and then I have a 2% extension fee for an additional 3-month extension. So for example, if you borrow $100,000 from me, I'll charge you 12% annual interest, 3% origination fee for 6 months. If the loan goes beyond 6 months, I can charge, as the lender, I can charge an additional 2% extension fee. And that's just how I have it written in my promissory note. So you, as the lender, you could charge an additional 5% if you wanted to, or an additional 0.5% as the extension fee. It's up to you as the lender. I charge a 2% extension fee if the borrower wants to extend an additional 3 months. So that's really important. And here's the reason why. I like to incentivize my borrowers to get the project done quickly. I don't want these projects to go 9, 12, 18, 24 months, because whenever these projects get extended, it's usually a bad thing. I don't want my borrowers, my real estate investors, to drag their feet, because they're not only paying interest, they're paying property taxes, utilities, insurance. If holding costs become too high, then these real estate investors are less likely to turn a profit. So I don't want these projects to extend beyond 6 or 9 months. So I have an extension fee, and it also protects me as the lender. Origination fee, 3%. Underwriting fee, usually a flat fee, anywhere from $500 to $1,500 underwriting fee. If it's a first time borrower, I'll charge $1,500 as an underwriting fee. Processing fee, $995. That's really standard. If you look at most mortgages, most lenders, they're charging a processing fee, usually $500 to $1,000. If it's a repeat borrower, I love repeat customers. There's that trust, there's that good working relationship. If it's a repeat borrower, maybe I cut the underwriting fee in half. Maybe if it's a third or fourth time they're borrowing from me, maybe I don't charge an underwriting fee at all. But origination fee, processing fee, almost every time. So why do I prefer lending, private money lending, over owning rental properties? I will admit, owning rental properties is a much better long-term financial strategy. You are better off owning rental properties from purely a financial perspective. If you look at appreciation, depreciation, absolutely. Holding long-term rentals is better because the property depreciates, so you don't really pay taxes on your cash flow with certain exceptions, but then the property also appreciates in value anywhere from 3 to 8%. Although over the past 4 years, it's been more like 8 to 15% of annual appreciation, but traditionally 3 to 5% annual appreciation, depending on where you live in the real estate market that you're in. So huge tax benefits, huge appreciation, and you're going to cash flow with the rental income and the mortgage. But it's a lot more work, at least in my opinion. I think it is. If you were to buy a rental property for $200,000, like I said, you could probably lend out $200,000 in a year, maybe work 4 to 8 hours a year lending out $200,000. But you could also buy a rental property for $200,000. You might work maybe an hour a month, maybe more, probably more in the beginning, but maybe once you place a tenant and once you fix up the house, maybe you're working an hour a month for the last 6 months. But let's just say maybe the first 6 months while you're fixing it up, managing the general contractor and trying to place a tenant, maybe you're working 5 hours a month for the first 6 months. So that's 36 hours per year on $200,000. So you're definitely spending more time managing a long-term rental. Repairs and maintenance, placing tenants, vacancies, service calls, overflowing toilets. Even if you hire a property management company or a general contractor, you still have to manage the property management company. You still have to manage the general contractor. So it's definitely more work holding long-term rentals, but it's the better financial play. So I think lending is much less work. You're not going to get appreciation and depreciation, but it's much less work, private money lending. And so for me, I want to focus on my bookkeeping business for the next year, for the next 2 years. I want to be able to focus on my bookkeeping business. That's why I decided to get into private money lending, because I knew if I was going to get a rental, I was going to turn into a full-blown real estate investor, and I wasn't going to have time for my bookkeeping clients. So if you're looking for a passive income, if you're looking to keep your day job as a bookkeeper or an accountant or whatever your business is, if you're looking to keep your day job and just earn truly passive income, I think private money lending will be a lot less work than actually owning real estate investments. A big part about being a successful real estate investor is finding good deals. I didn't want to learn how to do that. I didn't have time for that. I didn't want to learn how to do that. I didn't do that. Finding good deals is what will make or break you as a real estate investor. And that takes a lot of time, a lot of energy, research, expertise to find a good deal. So instead, I let other real estate investors find good deals, and then I analyze and underwrite the borrower. So I'm leveraging my expertise. My expertise, financial reports, banking analysis, tax return analysis, underwriting deals, risk mitigation. That's my area of expertise with my finance and accounting background. So I am leveraging my current strengths as a accountant and bookkeeper. And so private money lending just made a lot more sense. Think about it like this. If you were a real estate agent versus a bookkeeper, a real estate agent probably not necessarily as financially savvy as a bookkeeper, but a real estate agent looks at houses all day. A real estate agent would probably be very well positioned to find good deals. You're very familiar with the MLS, the real estate market, analyzing deals, finding good deals, walking through properties, asking questions. Real estate agents are probably much better real estate investors because they're able to find good deals. But a bookkeeper would probably be potentially a better lender because we are better at underwriting borrowers and analyzing and interpreting financial documents. So that's my analogy. Like a real estate agent, probably a great real estate investor. Bookkeeper, maybe a better private money lender. I've got more notes, but it's already 11:30. I was going to continue going. I think I'm going to stop there and I'm going to save the second half of my notes for tomorrow's video. Let me know in the comments if you liked this style a little bit more streamlined, a little bit more organized, a little bit more intense, a little bit more teachy and less interactive. I will go through the questions in the chat. But yeah, let me know if you prefer this style of video, just kind of like hardcore teaching and going through my notes. Okay, let's look at the questions real quick. Let's look at the chat and then I got to go. Okay, what is the monthly profit margin percentage of your bookkeeping business and how much of that is reinvested into Zip Capital? So the monthly profit margin percentage. So my bookkeeping business has basically no expenses because it's just me. I don't really have any expenses, honestly. So I make about $40,000 a month and that's it. Like I don't have any expenses. So it's not like a traditional business where you have inventory and employees and subcontractors and rent and supplies and materials and payroll and marketing. Like I don't have any expenses really. I really don't have, I have like insurance and a little bit of software. I might spend $1,000 a month at most. So whatever 39 divided by 40, that's my gross profit margin. And I'm reinvesting almost all of my money back into Zip Capital. I do still invest in traditional retirement accounts. I am maxing out my IRA and my solo 401k. But keep in mind, once you get to a certain income level, then you can no longer take advantage of a Roth IRA. So my income has exceeded the point to where I can take advantage of a Roth IRA. My income has also exceeded, I think $400,000 of annual income is the point where you can no longer take advantage of a traditional IRA. So I'm still putting money into a traditional IRA. It's like $7,000 a year with the hope of probably doing a backdoor Roth IRA in the future. I'll be honest, I don't know much about it. I'm probably going to leverage my brokerage, my investment advisor, my financial advisor to help me with the backdoor Roth conversion. But I am maxing out my IRA, my wife's IRA, and my solo 401k. So all of that is invested in the stock market. I do love the stock market. I love mutual funds. I love the S&P 500. I am maxing out those accounts. And then I'm putting everything else into private money lending. Okay, KLC. Just wanted to say I've been following you for years and I'm very excited to watch this next chapter of your career. I know you can do it and I'm rooting for you. Really appreciate you, KLC. I really, really appreciate that. Din, rooting for you, but will miss the bookkeeping videos. Here's the thing. My bookkeeping videos are still up and I'm still talking about bookkeeping. I'm growing as an entrepreneur and you are too. So we are going to grow together. So I'm very excited for this. I know it's going to be hard for some people, but I'm very excited for this. Hi, Zach. Do you have two separate companies for private money lending and your fund? If so, is the interest you receive from PML is what you pay out to your investors for your fund? Thank you. So whenever I got started, I was just lending out of my bookkeeping business. Don't necessarily recommend that, but yes, I was just lending directly out of Harrisburg Bookkeeping. I did not start a separate company until this year. So I did just a couple loans on my own through Harrisburg Bookkeeping. And then January 2025, I started Zip Capital. And from there, now that's where all of my current loans are running through Zip Capital. Yeah. So, and that's also my fund. So is the interest you receive from your P&L, so I pay my investors 8 to 12% fixed returns. So it's not like a hedge fund where we're splitting the profits of the fund. My investors in Zip Capital get 8 to 12% fixed returns. So it's a great alternative to treasury bills, bank CDs, savings accounts, money market accounts, because it's fixed returns. So it's not going to fluctuate like cryptocurrency in the stock market, where some years you might be 12%, other years you might be 4%, some years you might be negative 6%. The idea behind Zip Capital is that I'm charging my borrowers fixed interest income. And so I'm paying my investors the same fixed interest. So if I make 18% on $100,000, I pay somebody else 9%. I'm profiting the difference, 18 minus 9. So I'm profiting 9% on that $100,000 investment. Okay, couple more questions. Let's see. Steel Sadler, is that extension fee paid up front at time of extension or paid out at the end of the extension? So it is paid at the time of extension. So for example, Steel, if you borrowed $100,000 from me on, let's just say, December 24th, then the terms would be 6 months. So June 24th, your $100,000 would be due. So I'm keeping track of all my loans in an Excel spreadsheet, and I'm looking like, okay, which loans are due in June? And so I'm setting reminders for myself, and I would email you, Steel, on June 23rd. And I would say, hey, Steel, here is your extension fee. Here's your loan extension memo. No action is required at this time. I'm simply letting you know that you will be charged a $2,000 extension fee if the loan is not paid off by June 24th. So typically my borrowers will email me back and say, yep, no problem. I need a couple extra months to sell this property. I'm fine with the extension. So they don't really have a choice because I'm the lender. That's the cool thing about being the lender. I have all the leverage. As long as the words are in the promissory note, you have all the leverage. So I get their banking information. So I have their account number and their routing number. And I tell them like, hey, if this loan is not paid off June 24th, per the terms of the agreement, you will be charged a $2,000 extension fee. You don't need to pay me. You don't need to send me a check. I already have your account number. I'm simply going to charge you a $2,000 extension fee. If you don't want to pay the extension fee, no problem. Pay off your loan by June 24th and you won't be charged the extension fee. That's the beauty of being the lender. You really do have all the leverage. C Brown, I definitely like this style better. That's good to know. I'm gonna do better. I'm gonna try to do better of being more organized with my videos. So I appreciate that feedback. You have the same question as Din. Subcontracting any clients. I have a subcontractor for my bookkeeping business, and yes, he is already taking on any new clients who come into Harrisburg Bookkeeping. I am immediately onboarding them with my subcontractor. How many bookkeeping clients do you have? What hours do you keep? I'm trying to do the math, making 40K per month. LOL. I have 87 bookkeeping clients. My subcontractor manages 5 of them, and I have 87. So I manage 82 bookkeeping clients. They pay me about $560 per month. So I'm making a little bit more than $40,000 per month. And I spend about 40 hours per week managing 80 clients. So I spend about 30 minutes per day per bookkeeping client. Are you still interested in bookkeepers working for you? No, I'm not taking on any other subcontractors or employees at this time. I am all in on raising $5 million for Zip Capital. So that's where I'm going to end the video. I appreciate each and every one of you. You are my biggest supporter. I'm talking to you right now, truthfully, honestly. I would not be able to do this if it wasn't for you. So I love making these videos. I love talking about this stuff. I'm so excited to grow with you and help you grow. And I'm excited for you to help me grow. Thank you for interacting with my channel. Thank you for asking questions. Thank you for watching my videos. I'm going to be live every day, 11 a.m., same time, same place. I so appreciate all of you. I will see you all same time, same place tomorrow. Thank you all so much. Have a great day.